me now, Rob McEwen, the chair and chief owner of McEwen Inc. Great to see you as always.
Thank you, Mark.
Thank you for joining us.
Happy to be here.
Let's just start with the name change, which happened a while ago, McEwen Inc. from McEwen Mining. What's the thinking there?
I wanted to broaden our mandate of what we could do associated with the mining industry. And I also felt that we need to make mining more attractive. And there's this almost automatic reaction by most people that mining's bad. So let's take that instant response away,
right,
and offer a story that is delivering a product that is used every day in modern society. And we need it to enjoy the life we have.
Yeah, people forget that.
They forget about it
when they complain about it. So you've got a very a bold plan to more than double gold and silver production by 2030. Part of that will be bringing Grey Fox into production. You're planning a PFS in the first half of next year, I guess,
yes.
Right there. All right, so how do you get there? Can you expand on that plan?
Yes, well, the PFS is for our property in Timmins, Canada, and we're looking at about a 70% increase just there. We've got several million ounces of gold, and the PFS is going to tell us how we're getting there. We're also increasing our production in Nevada. We're restarting the mine we had in Mexico, and we've been doing a couple of acquisitions, and assuming one of them closes before year end, there's another source of production that will get us up to 225, 250,000 ounces. I've always had a goal of getting to 300,000 at a minimum, and I think we're in a market where that's possible.
All right. Now, in the most recent quarter, McEwen Inc. Swung to a profit. Much of that had to do with the higher gold price. So can you quantify how much of an impact the higher gold price is having on your business?
We have been a higher grade or higher cost producer. So when the gold price runs like it has, the gross margin expands much faster than someone who's a low cost producer. So if I was comparing our first half of this year to the first half of last year, and our adjusted EBITDA is up 91%.
Okay.
So there's huge leverage in there.
Right.
Another factor, though, is our copper project. When we were owning more than 50% of it, we consolidated all the expenditures. And the copper project, those are all considered expenses right now. So we were booking huge losses as a result of copper. We have dropped, once we have the feasibility study out, we moved to an equity because we're below 50 right now. But once we have the feasibility study out, then that'll disappear as well. And so that'll expand our bottom line and the EBITDA.
So you're referring to Los Azules in Argentina.
Yes.
It has a nearly $1 billion valuation. You're planning a feasibility study, as you said, later this quarter, I guess, or so.
It'll be out the end of October.
End of October. Okay, very good. And so you've noted that labor and equipment have increased the costs by about 40% in Argentina. But at the same time, as you say, the gold price is going up. So is that sort of offsetting the higher costs?
To some degree.
Yeah.
Yes. There will be a devaluation probably in Argentina that'll counteract some of that inflation. But no, we'll have it out. It will be a bigger mine than we had in the PEA, slightly larger. Grade will be a bit lower, not much, but we're looking at producing about 400 million pounds of copper cathode a year. We can see a mine with a 55-year life. And initially a 60-65% gross profit margin.
You said 55-year life of mine?
Yes.
Wow. So lastly here, Rob, let's take stock of McEwen Inc., of what you have. And these are your numbers. 4.2 million ounces of gold, measured, indicated, and inferred. 37 million ounces silver, nearly 20 billion pounds of copper. And that ultimately, when things are really rolling along, well-oiled machine, not that you're not now, you'll be spinning off 300 million a year in free cash flow. So those are big numbers. So is the market waking up to the opportunity? I was just looking at your stock price. I would say, yes, it's doing well, but it's not like it's soaring or,
No.
No.
Well, it's improving, but we have internal management numbers that we present, but at the low end of our valuation, we see $19 a share US. We're at 13 and change. So there's about a 45% lift we can see there. And the high end is about $60 a share, so a 4.5x from where we are right now. I think as the cash flow starts coming in, people doing that, their catalysts, the feasibility of Los Azules, I think will be very positive. We're going to have resource updates for Fox, for Gold Bar, and you'll see the numbers for Los Azules. We have PFS coming out for Fox in the first quarter, and all of those are conspiring to make a much better story. And,
Right.
and we did a range like that. 350 is if gold was at 3,900, but we're 7% lower than that. So don't rely on that. But it's still a very strong growth in earnings. We have 51, 54 million at the end of June in cash. Working capital was about 4 million more than that. We have 130 million in debt. We did what is called a capped call convertible, and it allowed us to do a convertible at 100% premium to the market, which is quite unusual.
Yeah.
And it's already trading at a premium. But it would affect, our stock was at 865 US, and we did the conversion is set at about 11, but by getting this capped call event, you synthetically move the conversion price up to over $17.
I see.
It's an instrument that's interesting ripples to it.
Okay.
And you did say there's some work we're doing in recoveries that might have a broader application, but that's under wraps to be told later.
Right, yeah. More to come.
More to come.
More to come. Lots of catalysts, lots of growth expected in the next 5 years, let's call it.
Yeah.
So very exciting.
And then you have a price of gold, which I think the macro picture is very strong. Geopolitical risk, central banks going large on gold after quite a while, and the big disparity between gold and gold stocks, the seniors, and even greater. Like if you go back to 2010, the juniors are still negative
Really?
performance,
Wow.
down about 21%. Gold is up huge, and the GDX is still, it's way off below the gold. And as you've observed in the past, when you get into a gold market, at the end of the gold market, the juniors and the explorers are where you get just extraordinary movement in price and capital appreciation. You have to remember to get out at some point because it stops.
Yeah. Of course.
But you're looking at an industry right now, the treasuries are swelling of the big companies. They have been selling off their higher cost operations. They don't have a development pipeline that is suitable right now for this phase of the market. The starting gun has gone off, and you're seeing some big M&A transactions, and to me, that's just the start. And the juniors are going to be the fodder for that growth. So in the past, you've seen, double digits on the seniors performance. You'll get triple, quadruple digits on the juniors.
All right. Well, sage commentary from you, Rob. Thank you very much.
Thank you, Mark.
Good to see you.
Great to see you.
Okay, Rob McEwen of McEwen Inc., Chief Owner and Chair.